A very warm welcome to Money9's Daily Market Dose Corporate Central. It's Monday and we're back to give you the day's pulse of the corporate world. And not just that, we get you the highlights on the major fluctuations happening in the market on this show as well. Over to today's big corporate updates. Two Adani Group companies, Adani Enterprises and Adani Transmission, received board approval to raise 21,000 crore rupees through QIP placement route. In a filing to exchanges, Adani Enterprises said that it would raise 12,500 crore rupees and Adani Transmission informed that it is planning to raise 8,500 crore rupees. In more news, Adani Enterprises has revived its capex plan after a 4-month pause with a planned initial investment of $1.5 billion to kickstart its new businesses. The flagship company, which cancelled its fundraising plan in February, is planning to pump fresh investments into solar module of manufacturing, green hydrogen and Navi Mumbai airport and data centers as well. The Supreme Court on Monday heard the plea moved by SEBI seeking more time to complete the Adani Hindenburg probe that has been adjourned. Go First has access to around 300 crore rupees of funds and expects to start operations as soon as possible. The Wadia Group Airlines plea for insolvency was admitted on May 10th and Abhilash Pal was appointed as the interim resolution professional. Pal has already invited claims from creditors which will be received by May 23rd. Wadia has infused 290 crore rupees in the airline in April. Under the Emergency Credit Line Guarantee Scheme, the airline can draw an equivalent amount in loans from banks. Meanwhile, global aviation leasing watchdog Aviation Working Group that monitors leasing and financial laws on behalf of plane makers and lessors has put India on a watch list with a negative outlook. It reasoned that India failed to comply with international aircraft repossession norms after Go First was granted protection under the insolvency proceedings. India's score has now been reduced from 3.5 to 3, also amid the Go First crisis. Rival airlines have increased flights to take advantage of vacant slots. The promoters of Godrej Industries are setting up a family office to invest in new age businesses with an aim to pursue riskier bets in unrelated segments and incubate new ideas. According to a report by Mint quoting Nadir Godrej, the family office will commence its operations with initial corpus of a few hundred crores and will raise additional funds as opportunities emerge. The move comes after Godrej's consumer products arm was investing 100 crore rupees to anchor the early stage fund early spring. Godrej's family office and investment plans also come as Indian startup funding plummeted 66% to $888 million in April 2023. Vodafone Idea lost 1.3 million 4G users in February, the steepest decline in 21 months for the loss-making carrier. According to analysts like Jefferies, VI's 4G subscriber decline in Feb 2023 was its highest 4G subscriber decline in over 20 months, suggesting that 5G rollouts by Bharti Airtel and Jio are putting pressure on its 4G subscriber base. This has highlighted the threat to the carrier's market share in all telecom circles, but primarily in metro and A-level or high revenue yielding circles where the company's share has been impacted the most. Bajaj Electricals will target 1 percentage point improvement in margins every year through its strategy to premiumize the product portfolio, reposition the brands and launch a new premium brand along with demerger of the power distribution and transmission business. Managing Director Anuj Podar said that in the past 6 months, the company has repositioned and relaunched its two largest brands, that is Bajaj and Morphy Richards, and has just launched a new premium and aspirational brand Next. Next, the company will reposition its cookware brand Nirlep. As of 2021-22, the margin of the consumer business was 6.8%. Under this strategy, there will be an investment of 100 to 150 crore rupees annually, and a review will be done regarding the need to increase investment in 2025. Zomato shares may see limited upside in the near term amid news flow around government-backed ONDC expanding its footprint in the delivery market. Zomato shares have dropped 4% in 3 days on the BSE, and by comparison, the benchmark S&P BSE Sensex has added 0.2%. Zomato may have to compromise on the margins whenever ONDC scales up. Its valuation multiplies may see up to 20% correction, analysts have said. This could make ONDC emerge as a strong competitor to Swiggy and Zomato. EdTech giant Byju's has closed a 2,000 crore rupees round from Davidson Kempner Capital Management, a US-based investment firm, in a structured instruments deal. This is a part of an ongoing $1 billion funding round the Bengaluru-based firm is raising in a mix of equity and structured instruments at its current valuation of $22 billion. Around $700 million of the $1 billion is expected to come through equity, for which Byju's is in talks with existing and new investors as well. These include investors like Abu Dhabi's sovereign wealth fund ADQ. Byju's was in talks with Davidson Kempner Capital Management, Oaktree Capital Management, and also Apollo Management, among others, and decided to move ahead with David Kempner, according to the sources. Well, that was all about corporates. Now time to analyze some market stocks that were in action today. Let's take a look. Tata Motors stock hit a new 52-week high on Monday, May 15, due to strong Q4 results. The stock touched an intraday high of 537.15 rupees before closing 530.55 rupees, up 2.8%. There are two big reasons behind this enthusiasm in the stock. First, the company has switched from loss to profit, and the second, it announced its dividend for the first time after 2016. It has registered a profit of 5,408 crore rupees against a loss of 1,033 crore rupees for the year, while the estimate was around 2,500 crore rupees. There has also been an increase of about 83% in profit quarter on quarter. The company's income increased by 35.1% from 78,439 crore rupees to 1,05,932 crore rupees. Operating profit increased by 47% to 12,796 crore rupees from 8,727 crore rupees. Also, the company's board has declared a dividend of 2 rupees per share, which is the first time since 2016. The reason behind the improvement in the results has been the performance of JLR sales. JLR contributes more than 80% to the company's consolidated income. Shares of Coffee Day Enterprises, the company that runs coffee shops under the name of Cafe Coffee Day brand, saw a huge jump of 16.5% on Monday. The reason behind this boom is the huge deal that took place in shares of Coffee Day Enterprises. On Monday, there was a big deal of 7.14 lakh shares of Coffee Day Enterprises, after which tremendous action was seen in the stock. Despite Monday's boom, Coffee Day's shares declined by about 20% in this year, that is 2023. The stock touched a 52-week high of 73.50 in September 2022 and has fallen by about 47% from there on. Shares of DLF hit a new 52-week high on Monday, May 15, following strong Q4 results and management commentary. The stock touched an intraday high of 475.80 rupees, the highest level in a year. The stock rallied up to 9% on Monday, and the company's Q4 profit grew 40.4% to 570 crore rupees from 406 crore rupees, though the estimate was around 645 crore rupees. The company's income decreased by 5.9% from 1,547.3 crore rupees to 1,456 crore rupees, but the working profit has improved. The working profit increased by 8.4% from 367.5 crore rupees to 398.5 crore rupees. In the post-result investors call, a senior official of the company has said that in FY24, the company plans to launch projects of 1.12 crore square feet with a target of 20,000 crore rupees sales. The demand for the luxury housing segment in the country is very strong, and the company expects that this segment to contribute around 60% of its revenue in FY24. Most brokers are bullish on the stock after the results. The stock of Avenue Supermarts, a company that runs a retail chain by the name of D-Mart, saw a drop of 5.5% after the fourth quarter results. On Monday, May 15th, D-Mart stock touched an intraday low of 3,506.60 rupees, and the reason for the disappointment is the decline in the margin in the fourth quarter results. Operating margins decreased from 8.6% to 7.6%. Company's sales increased by 20.6% from 8,786.5 5 crore rupees to 10,594.1 crore rupees. But due to the decrease in the margin, the growth of profit of the company has been slower than the sales. Year-on-year profit has increased by 7.8% from 426.8 crore rupees to 460 crore rupees. This is because the growth of the company's expenses has been more than the sales. The company's total expenses increased by 21.8% to 10,002.2 crore rupees from 8,210.1 crore rupees during the quarter. Well, that's all on Corporate Central today. But before we wind up, heads up to some important corporate events and triggers which have the potential to make market impacts. Let's take a look. On May 16th, results of Bharti Airtel, Granules India, JSPL, LIC Housing, Oberoi Realty will be released along with Metropolis Health, IOC and BOP. Talking about results, Oberoi Realty's board will also consider capital raising. And also on May 16th, results of Indian Hume will be declared and the board will discuss raising funds by issuing shares. Also, Welspun India's buyback will remain open till May 22nd. And on May 16th, 6-month pre-IPO lock-in of 5-star business and Archean Chemicals will also end. Globally, US April retail sales and industrial production figures to be released on May 16th and also Europe's Q1 GDP figures to be released on May 16th. Well, that's all on today's Corporate Central episode. We'll be back with more new updates, corporate stories tomorrow, same time. Until then, keep watching Money9.